Hello everyone, my name is Hitesh and I welcome you all to TradeBrains YouTube channel. If you are new to this channel, please comment, like and subscribe on our videos, and please don't forget to press the bell notification icon to receive the freshly published content straight onto your device. Now this video is actually being popularly demanded by our viewers as to why they want to understand how exactly or what are the different facets of trading on Zerodha. So when I say facets, what we are trying to say is that when you add any stock to Zerodha, what's the procedure of adding a stock to Zerodha? Or when you buy or sell stocks through Zerodha, the ticket has various kind of tabs. We'll try to explain each and every concept in detail in this video. Now, what is the first step when you're going to start trading on Zerodha? Simply, you got to have a trading account, and secondly, you need to log into a trading account. So as you see on my screen, I've already logged onto a system. So the first thing which I would want to do is to add few stocks. Say I will add random stocks like say ICICI Bank, then maybe add say HDFC Bank also, then maybe add some non-banking stocks like Idea. There's a Vodafone Idea here. So if you can, and maybe you can also add say Yes Bank also here. So this is how you add simple stocks. You just have to type on the stock's name on the search bar and you have to click on them and they get added to your watch list. Now what is the next step into it? Now this is the most important part and this is the most critical part of this video. Say you want to buy shares of Yes Bank. So all you got to do is scroll on to the name of Yes Bank and click on the option of buy. Now you see this is a ticket. I have pushed in the center of the screen to give it a better clarity. You see there are different facets into it. First is this green tab and a red tab. Red tab means you're going to sell and the blue tab means you're going to buy. And there are different tabs into it, like a regular order, cover order, bracket order, AM order. I'll be explaining each and every concept in detail in this video right now. So the first thing which I'll be explaining here is the concept of a regular tab. So what does exactly regular tab mean? So what does it do? So regular tab is like placing normal orders in the market, and in this thing also you have two kinds of order, that is intraday order and long-term orders. Intraday orders are also called MIS order, that is margin intraday square off, and long-term orders are also called CNC, that is cash and carry. So by the name itself we must be able to understand intraday means a trade which has to be completed within the same day, and a long-term trade is that trade which can be carried forward to next day, that is you're allowed to carry delivery of stocks in the long-term trade. So when you're doing the intraday trade, the basic difference here is that the margin required to trade the intraday trades are comparatively or much lesser than the margin required to trade long-term trades, because when you're holding long-term trades you have to pay exactly the same amount as the amount required to buy the stocks, but when you're doing the intraday trade you have to pay only a part of it, because the stock price will move only up to an extent, and beyond that the position will be squared off. Another difference lies in the fact that the intraday positions are squared off at 3:20 p.m. Indian time. The exchange closes at 3:30 p.m. but the intraday positions are squared off at 3:20 p.m. Indian time. Now, and another difference between the intraday and the long term is that in the intraday system you are not allowed to place GTT orders, but in case of a long term you are allowed to place GTT orders. Now what exactly is a GTT order? GTT full form is good till trigger. In this option of GTT, the order which is placed in the market is the limit order. Now limit order and market order are two different kinds of order. In case of a market order, the position is entered in the market at the existing offer in the market. You just want to buy, you just hit the existing offer in the market. But in case of a limit order, you get to choose the price at which you want to enter the market. Supposedly the current price of Yes Bank is 17 rupees 45 paisa, as you see on the screen here, and I want to buy Yes Bank only when the price comes to say 17 rupees 10 paisa. So in limit order it allows you the permission to choose the price at which you want to place the order. So in case of a GTT, when you place a limit order, as in when the order is executed, you get to put a stop loss for the order and you get to put a target for the order. How does that work? So supposedly I have bought shares of Yes Bank at 17 rupees 10 paisa, or say 17 rupees also, and I'm saying that I'm willing to take a stop loss of 5% and I want my target to 15%. So when I say 5%, 5% of 17 rupees will be 85 paisa. So the stop loss will be placed at 16 rupees 15 paisa. And when I say 20% target, it will mean when the share price goes to 20 rupees 40 paisa is where my profit target is. So if any of the condition is met, so either your stop loss is triggered or your profit target is achieved, the other order is pulled from the market automatically. We don't have to go in the market to pull the order. If my stop loss is triggered, then my profit target will be pulled from the market. And if my target is achieved, then the stop loss order will be pulled from the market. That is the awesomeness about this concept of GTT. That is, you don't have to worry about pulling order. You just place the condition and the market takes care of itself. Now, before moving on, sometimes it becomes difficult to understand the fundamental aspect of a company. If you look here on the screen, you can see the price and you can see all the technical analysis because you have chart and everything. But if you were to understand the fundamental aspect of a company, that is how the company is doing, what is the balance sheet, how is the net profit been, what is the debt to equity ratio. So do that research. TradeBrains has recently launched their portal. It's called portal.tradebrains.in, whereby which you can research any company which you choose to invest. Say you want to research Reliance Industries, you just click on Reliance Industries. All the details about Reliance Industries, what's the revenue generated, what's the EPS, what's the market cap, what's the P ratio, all the important ratios, and everything is flashed on your screen, and you can see historical price for a tenure of 10 years in the market. You just can scroll over the screen and you can to see what are the prices have been. You have various financial ratios which you can refer to. Everything is put in a chartical way: profit and loss statement, the balance sheet, the cash flow statement, the quarterly result, the shareholding pattern as to what is owned by promoters, what is owned by public, how much is by FI investment, DI investment, whether it's increasing or decreasing. We can have a fair idea. Plus, the important thing is you can have peer comparison. That is, you would know that what are the competitors in the market and how are they performing in the market. And supposedly you would want to compare stocks also. That I have seen Reliance Industries, I would want to compare with any other companies. So you have an option to compare stock up to 5 stocks at one go. For the sake of explaining, I'll be using only 3 companies. Say I want to compare Reliance Industries, then I want to compare maybe performance of Maruti. Then I would be comparing maybe one bank also. You can either compare within the industry and you can also compare with players outside the industry also. So that is one classic feature of this portal here. You can compare say maybe an ICICI bank also here. And you can do the comparative analysis here. So as you see, it flashes the market cap, the PE. So without going to different tabs and seeing the values and remembering them, you can just look at one screen and you can have the complete analysis of understanding what exactly does it do. And you can choose the best stock to invest in the market. And now moving back to our explanation of the various options on the ticket. The next concept which I'll be explaining here, what is a cover order. That's a second tab on this ticket. So this is one of the most classic concept of trading which has been introduced. So more than classic, it's more of a revolutionary concept. So what happens here is this: as in when you place any order in the market and when it gets executed, a stop loss is placed in the market and the position which you have entered is the MIS, that is margin intraday square off. So what happens here is, supposedly if I have bought say shares of S Bank and I have chosen to put a stop loss of say 2% or 1.5%, as in when the order gets triggered in the market, that is when you have bought the share, the stop loss is put in the market and you don't have an option to pull back the stop loss. You can't pull the stop loss out of the market. So it brings also discipline in the trading. Sometimes what happens when you put a stop loss, you have a tendency to remove in the market and you wait and watch for the price movement. But what happens here is this: you have a plan for the trades and you can have a strict discipline for the trades. So you wouldn't lose much more than what you should be losing in the trade. And the best advantage of this thing is that because the stop loss is put and your risk is limited, you are given high leverage on the trading. Say, to give you an example, if I were to trade stocks using the cover order, you are given leverage of up to 20 times. And if I were to do futures and options trading, I'm giving leverage of up to 7 times. When I say 20 times, supposedly the share price of Reliance is 2000. To buy one normal stock, I have to pay 2000 rupees. But when I use a cover order, I can buy up to 20 shares of Reliance Industries by just paying 2000 rupees. But the catch here is this: your order will get automatically squared off at the end of the day at 3:20 p.m. Because it's an MIS order, the order will get automatically squared off at 3:20 p.m. Either you achieve your target before that and you pull out yourself. If you're still in the position in the market, the order will automatically be exited from the market at 3:20 p.m. And this feature is provided at no additional cost by Zerodha. That is, if you want to trade this feature, you don't have to pay any additional margin money or anything like that. There will be no extra charge incurred to take this trade. Just to give you an example, if you see the share price of Yes Bank on the screen, it is 17 rupees 55 paisa, but the margin required to buy just one quantity is 2 rupees 79 paisa. So if I were to buy say 8 shares, the margin required will be only 22 rupees to trade 8 shares. But if I were to buy a normal 1 share, I have to pay 17 rupees 50 paisa. So that it gives you the benefit of leverage. And if you're supposedly having a bullish bias or having bearish bias on the shares of a particular company, you can use this feature and you can maximize the gain which you can receive in one particular day. But be careful of the fact that the stop loss are very strict. As and when the stop loss is triggered, your order will be exited from the market. Even though the share price might go up to a desired level later on, but your position will be exited from the market as and when the stop loss price is reached in the market. So that is one feature of this order of cover order. So the next feature I'll be talking about is the bracket order. Now bracket order, what happens is this, that when you place a bracket order, as and when the order is executed in the market, there will be a stop loss placed in the market and there's a profit target placed in the market. And you also have an option of trailing stop loss. When I say trailing stop loss, what happens is, supposedly if you have bought shares at 20 rupees and you had a stop loss of say 19 rupees and your profit was 23 rupees. As and when the share price starts going up, your stop loss also starts trailing up itself. You give an instruction, it will start trailing the stop loss. Supposedly if the share price has gone to 21, you have an option to trail the stop loss to say maybe 20 rupees or 19 rupees 80 paisa. You can give a standing instruction to a system, it will automatically follow it. So the benefit of this method, this feature of trailing stop loss, is that once the trade starts going in your favor, your stop loss trailing puts the trailing stop loss price maybe sometimes beyond your entry price, so you at least make some money in your trade and you're not left with losses in the market even though when the trade went in your favor. So that is one advantage of it. And another thing about the bracket order is this: if you put a stop loss and a profit order, whenever one trade is executed, the other is pulled out from the market automatically. You don't have to worry about pulling the order out. And because of this feature of stop loss being there in the market, the margin required to take this trade is very less. It's almost like 15 to 20% only of the stock price to be able to take that particular trade in the market. So using this bracket order also, you get the advantage of leverage in the market. And the next important feature in this, or next important tab on this ticket, is the AMO. AMO is also known as aftermarket orders. So what happens sometimes after the market is closed, you would want to take some position in the market. So, and you won't be there, or you might not be there on your screen in the morning when the market opens. So, but you still want to take a position. So simple feature here is this: using the option of AMO, you can place the order to enter in the market, and as and when the market will open, it will place the order at that particular price in the market. So basically, if I supposedly were to buy the shares of Yes Bank at 17 rupees, but the closing price is at 17 rupees 30 paisa. So you can put an AMO order at buying at 17 rupees at whatever quantity you want. As and when the market comes to 17, it will execute an order for you on the next day. So that is one good feature of AMO. Now, before wrapping up, I'll explain you what are the timing of AMO. For equity, to place an aftermarket order, you have to place it anytime between 3:45 p.m. to 8:59 a.m. For currency derivatives, you have to place between 3:45 p.m. to 8:59 a.m. For trading futures and options, the AMO order time is 3:45 p.m. to 9:10 a.m. in the morning. So, and for MCX to trade any commodity in the market like a crude, gold, anything, anytime during the day, if the order is placed by using the AMO option, the order will go through only in the next day, like within the trading hours of say today. If you're placing an order of using AMO, the order will be executed only tomorrow in the market. You don't have to worry about what's happening in the today in the market. As on tomorrow, when you place an order and if the market comes to that price, that order will be executed in the market. I hope this video gave you a decent information about all the facets of the tickets. That is, a lot of people must be confused about a lot of features like what is a regular order, cover order, bracket order, AMO order. So using this feature, it will be easy to understand, or having a look at this video will give you a decent information about all the important facets which are required to be understood by using the ticket of Zerodha. If you have any more queries, please put your comments and queries in the comment section. I'll be more than glad to answer it. I thank you for your patient hearing. I'll again see you in the next videos of financial education. Thank you so much.